In this video, I am going to show you a rather unusual trading strategy that you will not find anywhere else. And the best thing about this strategy is that it can be applied to any type of financial asset and time frame. The strategy I am talking about is to find triangles on the candlestick chart. In case you don't know what triangles are, it's really simple. Triangles are patterns that form on the candlestick chart that usually take place in the middle of the trend and usually indicate its continuation. Traders take advantage of this to get an idea of the price movement through the breakout point, which becomes a trade entry signal. There are many types of triangles, like these three here. The important thing is that generally these triangles continue the trend. That is, if there was an upward trend before, and that triangle is broken, it is very likely that this trend will continue. It is also possible that the trend will turn, so pay close attention to the breakout of the triangle. For this video, we are going to see it with the Ethereum chart in the 5-minute time frame. We don't need to put indicators or anything like that. Although if we want, we could put an EMA of 100 periods to use it as a filter. That is, if the price is above the 100-period EMA, we will only open buy trades, and if the price is below the 100-period EMA, we will only open sell trades. Once we have selected the financial asset to trade in the time frame, the next thing to do is look for triangles. As I showed you earlier in the images, there are many types of triangles: ascendants, descendants, and symmetrical. We can use the line tool to identify them. For example, here we find a clear example of a symmetrical triangle. Since the trend before this triangle is down, and also the price is below the 100 EMA, we are going to make a sell trade. We will carry out the operation as soon as we identify the triangle, as far as possible at the above levels, since in this way, we will obtain a better price. The stop loss in this case, we will put it above the last grade maximum, and our take profit will be the height of that triangle from where it breaks. To know the height, we can simply take the risk-benefit tool and measure it from there. It only remains to locate it in the area where it broke. Look what happened. As this was a very obvious triangle, as soon as the price broke out of the triangle, the downtrend continued very strongly, and our objective was perfectly fulfilled. Now, let's look at an example with an uptrend. Here we have an example of a triangle, which previously had an uptrend. As soon as we identify it, we will buy in the area below to obtain a better price. We will place our stop loss below the last grade low, and we will place our take profit at the same height of the triangle from the area where the price breaks. And look what happened, the price more than met our take profit target. Something that should be clarified is that on this occasion, we did not give much importance to the EMA because it was somewhat lateral. Now, let's look at one last example. We try to find a triangle. In this case, we find one with a previous uptrend. So we would expect the breakout of that triangle to continue the uptrend. So we make a buy trade at the low points of the triangle. We put our take profit and our stop loss, but this time the triangle turned around and did not continue the trend. If we are a little more conservative, we could even trade when the triangle is already breaking, although of course this will make us have less profit, and there could also be false breakout signals. And ready, I hope this strategy has been useful to you. Do not forget that before trying it with real money, you need to try it in a demo account so that you can put it into practice by yourself. Do not forget to subscribe so as not to miss any strategy, as we upload the best strategies every week.